Good morning, everyone. Welcome to another episode, a class on the London session TopstepTV. My name is Deeyana Angelo, aka Market Stalker Dee. I specialize in some more alternative products, even though today I do have an MES position and also an MGC position. So I'm going to talk through them and just start on the larger time frame so we can see where we are from the bird's eye view. Starting on MES, we have this supply here. However, this is an equity index, and if we have a look at how the supply actually behaved, we can see that that there was not much of a reaction there. And as of this morning, I looked at the options activity, and that's moved from 61.50 all the way up to 61.75. So I want to see whether we can push to another all-time high and whether we can get gold to 3,000. Now today, 3,000 is just within reach. So I have the average daily range high at 29.86.3, and the same sort of story has happened in GC, where the calls have moved up yet again. Now generally that tends to mean there's still some call buying happening, and that these gamma lines and calls are actually going to be more of an accelerant than anything else. Now obviously nothing is guaranteed, but we do have that 3,000 number in our sights, so if we can get anywhere near there, that would be great. And if not, we take it on the chin and carry on, right? It is how it is. But for now, gold is breaking out of the initial balance with quite some force. And that tells to me at some point of the day, we're going to have a continuation. The VIX for gold, so the volatility index on gold is still very high. And as it stands, the average daily ranges over the last 10 days on gold actually span 432 ticks, which is absolutely crazy. You know, that's a lot for gold. So there's going to be opportunities throughout the day. But to start with, I'm just going with this break of the initial balance high. We do have a gamma line around 29.60, so it's possible that they go back to test that. However, if they don't test that, it's going to mean a lot of strength. It means that they smash through a level and never look back. So things that don't happen can also tell us a lot about what should have happened and the strength or weakness of the particular instrument we're trading. All right, so from the weekly chart on gold, there is not much to say there. It's so bullish. And we do have an all-time high at 29.68.6. So we're going to see what they want to do with this. On the daily chart, we had the newly formed supply from last week. That gave way. It did not even react. We just sliced straight through it, right? So this is the thing about looking at supply-demand areas and then looking at how price actually behaves. I just need to deal with one of my dogs because he's opened the window and he's looking out trying to bark. So give me a second. All right, now that I've dealt with Bernard, so this is one of those days where being a contrarian is probably not going to serve you well. Now, me as a reversion trader, it's something that is outside of my comfort zone to basically just go along with the move. But there are days when we have to override some of our instincts and the desire to keep shorting things, even though they're clearly still bullish. So this is one of those days. I do have an expectation on gold for 3K. It is a nice round number. It's been just screaming higher. There is not much reason technically where I don't see this getting reached. So that is the reason why 3K is important, is because A, it's a round number. B, you have some calls up there. So rather than just looking at the nearby calls, which are at 29.65, we do have the next call resistance up at 3K. So even the people in the options who are trading them quite a lot, that's what they're thinking. So they're thinking 3K. Whenever you get to all-time highs, it kind of becomes very difficult to find any technicals that will speak to structure of the market, because there is no structure. It just keeps going up. And this is one of those times. So one way that I like to deal with that is to look at the options activity and then to try and find a reason to go along with the trend. But there is a time when we start wagging around and we established the highs and lows. You have some sort of a range. Then you can kind of say, well, now we have an established swing. And now we can maybe consider both sides of the story. But as long as this is just shooting up, and up, there is no such structure. So we have to take that into consideration and we have to put it in our plans. This is also why I preach to be a chameleon, right? One of the reasons why I do have the chameleon as both the name of my VIP group, Chameleonaires, and also the mascot for my company. It's because of that, because I can be a bit of a chameleon. I can do range trading when required. I can be a reversion trader, and I can also be a momentum trader if and when the market calls for it. Does it mean that I'm comfortable in all of those setups? Absolutely not. Like, if it were up to me and if the markets would just yield to these desires, which never really happens, then I would just do my mean reversion trades. But, market conditions are market conditions. And if you ignore those, and if you just come in going, well, we're at the all-time high, I need to short this, that's how people lose their shirt, right? I've seen many a folk come to me having dug huge holes for themselves. And I'm like, well, what were you doing? And they nearly always say, well, I was shorting ES or shorting NQ. And they kept doing that because, there's this innate human nature that, how high can it go? Just remember, the markets can keep doing what they're doing with no regard to your feelings, no regard to what should happen, and no regard to what we would like to see. And that's why objectivity as a trader is very important. If you're not at a point where you can identify setups that fall under all three types, so all considering momentum trading or trend trading. And momentum trading is one thing where, you just break out of a high or a low and then you just go along with it. There are products that are more conducive to that style, like NQ, that does offer a lot of ticks upon the breaks, but generally it's not going to work most times, especially not for something like crude oil that likes to wag up and down. So crude oil does better with pullbacks and then just trying to ride it out up until a certain point of the day. Yesterday in the house account, JD and Coach J decided to take off the crude oil trade. And I wish I was watching at that point because I joined a little bit later to kind of see what the guys are doing. And I didn't see them take off the trade. If I had, the trade was taken off around 6 p.m. GMT, and that's around about the time when we have the rally into settlement or the sell-off into settlement, but there's a caveat to that. So when it's looking like it's a failed auction of some sort on crude oil around about that time, that's too late. Crude oil doesn't really like doing failed auctions on many days at that time. So if you get to a point where you're already hanging above the initial balance and then it sort of meanders to the top third of it and still holds it, I just hold the trade into settlement because that's just how it works. So it's not always, I'll wait for, the last hour of NYMEX and go back the other way. It's not quite that simple. So statistically, crude oil just doesn't do failed auctions very often for that time of day. And we can use that in our decision making. So even if it's wagging somewhere around it, I've only observed maybe 5 days in the last 2-3 years where crude oil did a full failed auction rotation back through the initial balance at that time of day. If you're going to look for failed auctions of that sort in crude oil and be worried about the trade, the time of day to do that would be after 3 p.m. and into the euro close. If it doesn't happen, that's a bullish sign. So similarly, something that doesn't happen also gives us information. And so just try to keep all of those points. And ultimately, it comes down to you knowing your product and making sure that you make decisions that are statistically backed, not just, I think it's going to go this way. Stats can be an awesome way to increase your confidence. I know that they're boring. I know that people don't like doing them, but they're very eye-opening, right? They're very eye-opening. And you can even see things that you're doing that you shouldn't be doing that become painfully obvious by looking at numbers. All right, let's have a look at some questions. So Justina said, do you have expectation on gold 3K? Yeah, well, today it's just about within the day's range, so that's what I'm kind of aiming for. But this is a very aggressive target. Yes, it's within the day's range, but, if we get anywhere to within about 20-30% of this, I will be super happy. Like, it doesn't, it doesn't mean that it's going to happen, but that's what we've got. We're breaking out of initial balance. We ignored the most recent supply, and me shorting this, it would be a little bit unreasonable. And sometimes it can work, sometimes you can short it and get lucky and then think, yeah, I'm going to short all-time highs now. But what tends to happen is that there's people with stops right above the all-time high. So that would be 29.69. And usually you get smashed through it, then a bit of a sell-off, and then they continue going. So it's just, that liquidity that pushes all of the people who are on the other side outside of the market. And what is a sell stop? So when you're in shorts, what is your stop? Well, it's a buy, isn't it? So all of those people who are short and trying to pick tops, they usually get run over quite aggressively. And that fuels the market moves past the all-time highs even further. So keep that in your toolbox for future reference. Grant says, Dee, I see you trading micros. Is that what you use always? I only trade full contracts when I have accounts that are in high six figures. Otherwise, I will control my positioning through micros. Now, last year, just being super transparent, obviously crude oil died on me. That was my main product. So I do have a drawdown of about 20K on this account, which I'm not very happy about. And I just don't want to trade like a lunatic. I'm somebody who manages the bankroll depending on the amount of cash that I have there. So position size to me is just like, I don't care about the position size. I can trade 1 micro, I can trade 100 minis. It just depends on the size of the account and the cushion. And I always go for longevity rather than some crazy amounts of cash. And if I am trading with a lot of size, usually those accounts are very nicely padded. And I have traded with size. If you go back through my some of my live streams on my own channel, Market Stalker D, I did run daily live streams about 3 years ago before I got sick, and you will see me trade like 40 lots, 40 minis in there. But that was not, that was a big account. So COVID was very kind to me. It was probably one of my best years ever. And, at the time I had, massive accounts. So therefore you trade with size. But as soon as we started to get outside of that COVID craziness, back then everybody was a day trader. Your dog, your cat, your mom, dad, grandma, everybody was suddenly a day trader. And that brought a lot of liquidity into the markets. So executing a 40 lot trade was not really that big of a deal. Like, I was actually super surprised that it filled me nearly instantly. It was like, what is going on here? How can that even be possible? But as soon as they started coming off the craziness, I started having issues with the execution. So I would try to execute a 40 lot, and then it would either hang or it would kick me out. It would just say no fill, because I have it, usually platforms are set to fill everything or kill the trade. So if it doesn't fill the whole position, it actually doesn't keep trying. You can set that in certain platforms, but again, it's one of those things where at that point it was time to come off the 40 lots and just to start going back down to, I think in the last, like before I really had my chronic illness taken over, I think I went down to 15, and that was comfortable. That was okay. But when I say comfortable, guys, you have to manage the bankroll depending on whatever you've got in the account. You trading, like we see people who get into the new XFAs and Globex opens and they plop in a 15 mini position in NQ as soon as it's like, the markets are open for trading. That's just gambling. That's like, what the hell are you doing? And I would have to argue that that's probably some sort of a dopamine issue. So they're trying to, I don't even know what they're trying to do. It's like, it's literally better to go into a casino and put everything on red, sort of. That's the kind of strategy that sort of behavior breeds. And I have to say that that's probably something to do with the dopamine rush and the increased motivation to trade the brand new account, and then they don't really control themselves. And lo and behold, next thing you know, they've been in the market for 3.5 seconds and they've lost the XFA that they paid the activation fee for, that they probably had multiple stabs at the combine. So it just adds a whole bunch of cash if you're not in a position where you're very financially comfortable, you just shouldn't be doing that. If you don't care, you can always get more, but most people are here to learn how to trade, get an extra source of income, and eventually make their lives better, right? But if you're doing the opposite, and if you're effectively not controlling your emotions to the point where you're damaging your standard of living because suddenly you keep buying more and more combines, and it's like, guys, what the hell? Just go and do some exercise or something and then come back. Don't allow the dopamine rush to drive your emotions, because that's all coming from your limbic system. It's not coming from your prefrontal cortex. So if you're not aware of that, if you're still, and if you're really not aware of that, I would argue you're still a new trader. If you haven't learned how to grapple with your own dopamine desires, that's a sign that you don't have enough experience and you don't know yourself enough, right? Okay. What is the all-time high on MES? Well, I do think that it's this thing. I'm on a daily chart, so I think it's 61, 62 quarter, let's say. Yeah, so is there another one? Oh yeah, there is another one, sorry. So all-time high is actually, you are right, 61.86, let's say. So, we don't have to be super pedantic about this. So yeah, there is a chance that we stop there. Now, I am aiming only for 61.75 here if we can get there, because that's the next call area. And in this case, I have enough space to run sort of my 100-tick trade, 96 ticks if we're going to be nitpicking. But yeah, that is the next area of call resistance, if you want to call it that way. Now on gold, we do have one just coming up, but yesterday when this happened, and I've been watching how they're running through these levels, right? As soon as they get there, there's a bit of a wiggle, and then they just keep buying calls. It's like, is absolute insanity. And because of that, it tells me objectively that I shouldn't, that I shouldn't be shorting this. So if I get hit on these, so be it. But, I am very, very comfortable with both of these trades at the moment. Tostino says, how do you size risk? Percentage of total account size. I found I trade much better with a big buffer, but the problem is I need to risk over 3%. So, okay, let's pick apart this. It doesn't feel like it's worth your time when maximum loss limit is the bankroll. So that tells me you're just looking at the money rather than being aware that this is a scalable activity. You trading with less size is not forever, okay? It's not like, oh, you're forever going to be trading with 2 and 3 micros or 1 MNQ or something. It's not forever. It's just for now until you build up your account, right? And now, if you're somebody who takes a lot of, cash out, that's also bankroll management. It also means that you haven't really taken into consideration how much buffer you've got in there. And we've seen that happen with people like Rafa. He's took out so much cash out of the market. He took out like 400 grand in the space of a year, but ultimately blew his account because he didn't leave enough buffer in there. So that's bankroll management. That's nothing else. So you have to be aware of taking a payout, sizing down, unless you've got high 6 figures, and then you can afford to take out, let's say, half of that. So you're now sitting on 250K and you still have 250K to play with. Things like that, If you're not thinking about that, and if you're working on, I'll just get 5 days of 200 and then take a payout, 2 things happen. First of all, your maximum loss goes to 0 immediately. So there's no more trailing once you took your payout. So now, if you've had 1,000 of buffer and you take 500 and you're still banking on that maximum loss limit still having the trail, you can forget about it. You're down to 0 and you have 500 to play with. Is that good bankroll management? No. Now, the part about not it being worth your time, that's your self-limiting belief. Yeah, you going in with dollars in your eyes rather than the setup and the actual risk management. It just tells me that you are a newer trader, but it also tells me that you've probably done quite well in your life elsewhere. Now, think about this. If you were a very famous musician and suddenly you want to go into acting, so here you have a part of your career that is extremely profitable for you, but you're going into a completely new career where you don't have a lot of skill. You're effectively a noob. Do you think you can command the same sort of fees that you commanded as a profitable rock star, huge celebrity? No, because everybody's just going to tell you to F off because you're trying to be an actor and you suck, frankly, right? So this is the same thing with people who are pretty successful elsewhere, and then they come to trade. They want the big money right now, right here. Doesn't work like that. You have to earn the way to bigger size. Just because you think it's not worth your time, it means you're looking at dollar amounts rather than looking at ticks. Now, I like to completely blank out, and in fact, when I'm trading by myself, I actually blank out the open P&L as well. So no reference to any monetary size. That way, every trade looks the same. Doesn't matter whether you're trading with 10 minis or 1 micro. It's still the same number of ticks. I will still use 40 ticks on MES or ES. Doesn't matter what the size is, because that is what my system requires. It doesn't require me to maybe size up on the smaller accounts but use a smaller stop. That is messing with the risk model. That's messing with the risk model. That means you're not using stop losses that speak to the actual volatility of the product at this time. It just tells me that you are trading your P&L. And we always say, do not do that. And I know that on TopstepTV, we talk in dollar amounts and stuff. But back in the day when I was in prop firms, in office prop firms, nobody ever talked about money. We all talked about ticks. Oh, I grabbed, 15 ticks out of this. Or, hey, I did a smashing trade here, grabbed 200 ticks today. That would tell us a lot more than somebody coming in and going, guys, I made $250,000 on this trade. It's like, how many ticks did you risk? And how many ticks did you get? That's the only thing you want to know, right? Because everybody has different account sizes. So, me hearing that somebody's made, 18 grand, how did they make it? And then it turns out they were in with like 15 lots and they only took a few ticks out of the market. Is that real skill? Or is that, I just got lucky and I took my money and ran? For me, I will always have more respect for people that can figure out the entire market state and then go, okay, what's the appropriate strategy here? In that case, you can say, well, actually, we are in a trending market and it keeps shooting up. Let's see if we can get a trending move out of it. And then I talked about it yesterday where some newer traders would be like, oh, I'm going to scalp here. Why are you scalping a trending move? Like, it makes absolutely no sense. You're just getting caught up when it's just going to go up and to the right if the day calls for that. Now, today we have on gold, we have open above value. We have calls that were just ignored yesterday. We have a huge rally from the initial balance pretty much immediately, like within the first 90 minutes. I take the first 2 hours of London to figure out what they want to do with it. And that's one of them. Within 90 minutes, if we have a big move outside of the initial balance, that speaks to the strength of the buyers. You don't normally get that, right? You normally get a bit of ambling around and then they go down, then they kind of stay inside initial balance and then they sort of pop their head outside of it, come back into it. It tells you, market profile can tell you the strength of the auction. This is when you smash outside of the initial balance already in C period, that's like immediately after the first hour is over, they just went up. Now they could hang here for a while because London does that. They make the move and then they just don't do anything until the overlap. But the fact that they created a pretty big single print trail on the upside and also ignored yesterday's calls. That's all just strength. So for me to be picking tops here and grabbing a few ticks here and there, that's not appropriate strategy for the thing that gold is doing now, right? It's just going smashing higher and higher and higher. Now, how do you size risk? So there are a few ways to do it, and I suppose the simplest way to explain it would be if you take the maximum loss limit, if it's a new account, and then divide that by 10, that can become your daily loss limit. So however many trades you do in a day, you need to fit your position size, and this will be different for everyone, but you have to fit in your position size into that. So let's say 4.5 grand on the 150K, divide that by 10, that gives you a personal daily loss limit of 450 per day. Just remember that these accounts are quoted in nominal value. They're not quoted in what you're actually allowed to lose. So while the 4.5 grand maximum drawdown that you get as a part of a 150K combine and the future XFA, it's not a 150K account. It's effectively a 4,500 account. But most of you behave as if you're trading a 150K account. It's like, oh yeah, it's 150K. I'm going to start with 3NQ. And then all of you are wondering why you're blowing out of XFAs. It's like, that is why you're sizing up. You can do that once you've built out the buffer, right? Once you're over the trailing drawdown, once you've, generated 20K of something, of a buffer in your account. But even then, I would say micros up to 20K and then minis over 20K. However, what we see constantly, new XFA, and they put in a 15 lot at Globex NQ. You're not going to last 5 seconds, mate. Like, what are you doing? And then, comes crying, oh, it's a scam. Is it a scam? Or are you just being a complete muppet? That's what I usually tell them. It seems harsh, doesn't it? It's harsh, but it's the truth. Like, stop being a muppet. You'll do a lot better. So don't get so engrossed into, oh, it's not worth my time. It's just for now. Have a bit of a concept of delayed gratification. Look beyond one day. Look beyond 1 week, 1 month. What are your goals? And if your goals are to make as much money as possible, I can guarantee you that's not going to happen. Okay? You might get lucky and you might have a couple of days where you do smash it, but for all the rest of it, you're going to be one of those people that blows out of the XFA very quickly, and you're not here again because you're constantly cycling through combines, because you're in a spin cycle of get a combine, get to an XFA, make some cash, blow out, and you keep doing that, right? Stop doing that. Stop cycling through combines. It's not, once you get to a live account, you can't even have more XFAs. So respect those accounts a little bit more. If you're in a really good situation financially where, spending, 2K a month on combines doesn't hurt you, go for it, man. Like, go for it. It's fine because it's not going to hurt your standard of living. But what is really disconcerting is that some people, like YouTubers especially, they will just keep buying combines, and they are in a better financial situation, much better financial situation than most. So now the poor dude who's like trying to level up his skills and get to a point where he's got another source of income, working really hard. Now they see these people doing that, so they emulate and they go off and buy, a million accounts from somewhere, or they immediately buy 5 combines without ever having received a payout, without ever proving their competence in the markets. And then what happens? They blow out of all of those accounts. Now they have to start again, so that's another cost. I've seen people that have spent like upwards of 5K a month for combines every, on resets and on this and that. Is that good money management? We're supposed to be risk managers. Is that good money management? No, of course it isn't, right? So take a look at where you are as a trader skills-wise and whether you even deserve to trade with any size. And if you cannot hold on to your XFAs, if you keep passing combines in 2 days and wondering why you can't keep an XFA, that's your problem, right? You are trying to trade with too much size too quickly for the size of the account that they give you. But it's not forever. Like when you're trading with smaller size, it's just for now. It's not going to be a year from now. It's not going to be 5 years from now. It's just for now. So a bit of patience. It goes a long way. Okay, so Christian says, if my 3-to-1 is too hard to reach, I hit my stop after going up above 1-to-1. Should I drop my win-loss ratio? Can you suggest something else? Thank you for your support on the channel. Okay, so 3-to-1s, I would say those are home run trades on intraday. I know that there's a lot of people kicking around going, oh yeah, just use a small stop and then hit 3R. There's a problem with that. Those smaller stops are going to get whipped out very quickly. You've seen that I don't like using small stops. I always give it a bit wider berth, and it's also why I can stay in on some of my trades nearly all day. But it also means that my risk is small while my upside is pretty big. However, if we're in a range-bound day, I'm not going to go for 3-to-1, 4-to-1. I'm going to go for 1-to-1. But my stop size won't change. My stop size is still going to be, right now, gold requires 55 ticks. So if you get to a point where you are consistently applying the type of a strategy needed for that type of a day, you will notice that your risk reward should fluctuate with the quality of the setup. If you are in a trending move like gold, you can try going for 3-to-1. But 3-to-1 for most products on most days, that's going to be a very ambitious target that's never going to get reached. Like you're going to reach it once in 3 months, right? Don't forget that people get seduced by the amount of momentum. So when you have a market that has a lot of momentum, what tends to happen is that people start shooting for home runs and swinging for the fences. Okay, so they're like, now, every day gold is going to reach me 3-1. It won't. There will be quiet days. Like, yeah, right now it's doing this, but there will be a day when all of this settles, maybe even towards the end of the week. We get to 3K and they'll be like, all right, let's chill. Let's now have a little vacay over here and, put out some loungers, get some cocktails. Like Coach Ray says, get up to a certain level, then spend some time drinking margaritas and, just kind of mingling and all that. So, think about how your risk reward relates to the type of a day that you're seeing. If we're in a range bound day, 1-to-1s are what I aim for. If we're in any normal day, like let's say I'm doing a failed auction, I will grab my 2R multiple, so not 3-to-1, but 2-to-1, and I will be happy. I will even grab 1.5R. Like most of my trades that I do intraday and we don't have a mad trending move, I will actually take them off anywhere from 1.5 up to 2R. So as long as we're over that statistically viable hump of 1.5, it's actually 1.3, but at 1.3 it's a little bit tricky because your accuracy still has to be reasonably high. So, you do have to maintain 50% accuracy, 1.3R. But then if your accuracy falls below that, this is where problems come with the risk model. Just like purely talking numbers, nothing else. So I would say 3-to-1 a little bit too aggressive for every single day. And then you also say, I hit my stop after going above. Yeah, so the problem there is you trading your stop. So you're looking for a trending move, but you're effectively messing with the trade. People always ask me, why is it that I don't like moving my stops? It's because if I'm shooting for 3 and 4R, I don't want to mess with my stop. My stop is where it should be for a reason. If I do anything with a trade, I will partial it, okay? If we're over 2-to-1, I might take off a third. So that just about pays for the trade a little bit. So that leaves me with very little risk and all the upside without ever messing with the stop loss placement. Your stop and trailing stops in general should only be really considered for very quick moves. Like if you are in, let's say you're doing a momentum trade, just a breakout, hit and run sort of trade. Yeah, move your stops to all your delights, right? However you want to play it, you can move your stop because that's like a quick trade that's not meant to last very long. As soon as you start to think, I want to run something for 3 hours, and you start messing around with trading stops, there will be a lot of ebb and flow. Nothing goes up or down in the same, in one go without some sort of a wiggle or a wave. And if you're expecting it to just go straight to 3-to-1, that's also being unrealistic. So if you're looking for 3-to-1s, don't mess with your stops. Control your position sizing with partialing rather than, I'm just going to move my stop and then it gets smacked at 1-to-1 and you're crying because it goes to your target. I'm guessing this is why the question is. Because your analysis is good, but you mess around with the stop and you Lenny the trade, as Hogue likes to call it. There's a book called Of Mice and Men where a character named Lenny plays with an animal and eventually chokes it to death. So plays with it so much that he doesn't realize that he's killed the animal. So that's effectively what you're doing with the trade. A bit of a grim picture, but I think it's going to stay with you. So yeah, use the partialing rather than moving your stops and report back to me. Fizzlet says, what's up with the NQ Grand Canyon yesterday? Didn't see any red news, or is it just selling shenanigans? I think it was probably a little bit of the... let me have a look at NQ, actually, because I haven't looked at it since the reversal challenge in any detail. That's not NQ. Oh, there it is. Right. Grand Canyon. It's a good way to say it. I mean, there is a more, like, NQ to me looks a lot more bearish than ES, so it looks like it is reacting to supply. We're reaching 9 EMA on a 4-hour time frame, so we're going to see what they do with it. But I don't like Red Canyon. I mean, yes, it was a nice move down, but it was I mean, yeah, it's so funny because, you know, your idea of what Grand Canyon is. This is not, like, yesterday we didn't even reach the average daily ranges. We reached the average. Yeah, so it didn't even go down to the expected range, which was down to 22,034. So I don't see this as any kind of a canyon. I just see it as a normal intraday move. And then we had a failed auction, partial failed auction up to VWAP, then another liquidity grab, and then that move into the end of the day, which was a short squeeze. I don't see any canyons here. I think it's a normal everyday movement of NQ. NQ be crazy, right? And that's what NQ does. So while the candles look like they're massive, it didn't even exhaust the average daily range. Like, this whole move was well within the day's average. It actually was turning around about 2/3 of the way. We still had another third of the average range statistically. So it could have fallen more, but it didn't. So to me, that was a quiet day. So yeah, nothing out of the ordinary. I mean, markets will go up and down. So yeah, somebody's asking, what trade are you in? I'm in 2 trades, so I have long gold and long ES. ES is opening inside value, but I went into it because of the calls moving higher. Is this the right time of day for ES? Probably not, which is why I've been sat in it for a while. But whatever, it's to do with the higher time frame picture and with the calls moving even higher from yesterday. So yeah, I would say it's just a normal ebb and flow. You know, we're at a supply, some selling should be expected. Now ES doesn't have any selling, so if I go to NQ and we have a look at it, it has a lot more selling. So it's doji, right? And then on a 4-hour chart, here's the most recent supply. Let's make this a bit bigger. Most recent supply, and then a reaction from it. So, and yet ES, or MES, went higher, almost took out the high. So we are getting a little bit of a sell, but it's not looking as bearish as... So to me, this looks like this went higher. This is why the calls went above. And like I said, if it doesn't work, it doesn't work. It's fine. But from the higher time frames, from the calls activity, I saw that they moved it from 61.50 all the way up to 61.75. So that's what I'm trying to get here. I'm trying to get the smash through the recent highs, and then they're probably going to carry on higher, but you know, I'm going to stop at 61.75. And then if it stops me out, it goes against me, that's also fine. Again, I said that I'm not bothered by shenanigans that equities can do. I would have traded DAX, but obviously we don't have DAX, so I'm going to trade that a bit later. That one's touching the value high. So in about 45 minutes or so, I'm going to see whether we're still inside value or whether we're pulling outside of it. Usually value high can be a pretty decent area to reverse, but sometimes they like to test it and then go back the other way. Kai says, where do I even start with learning how to read the market? I'm super new. I have only been doing this since December. My stats are good, but I feel like I know nothing. I want knowledge. Start with Dalton's books. So that's step one. I even have my books that arguably might be a little less wordy than Dalton's. But yeah, have a look at, out of the people that I really respect in the space is obviously Dalton. Have a look at VWAP Trader, JJ. He's pretty awesome. He's a former market maker. You need to start with some sort of auction theory. I started with supply and demand, but I was a swing trader, and I still use it in my analysis for larger time frames. Not so much for smaller time frames, but larger time frames, absolutely. Let's see what they're doing here. I'm just going to have a look at Bookmap because I've been talking, and usually when I'm really zoomed in, I tend to look at Bookmap a lot more. All right, so on ES we do have 6142, so there's some orders there, and then above we have 6151. So we're kind of sandwiched in between a block of orders here, and they haven't really made any decision right now. So it's possible they want to do a grab of 6142 before they go higher. And gold, yeah, gold is still bullish. Like they're sort of wiggling around, but there's a lot of buyers still. Positive delta. We do have some block of orders around 2965 roughly. Strangely right around where this gamma wall is. So yeah, so it's all looking all right. Mo says, Dee, can you stop talking about me? And you see, this is the thing. You get to know that, like, I've been coaching people now for 7 years. Probably even longer than that, because to be true, I actually started the coaching when I was still working in prop, because people want to know, hey, how did you get into that trade? Can you explain it to me? And then you start explaining, right? But yeah, once you've been in the space as a coach for a while, you see certain behaviors that that always bring a certain type of person and personality behind it. This is why, it's so funny to read these. With 2K balance using 20 micros per trade. That's crazy. Okay, with 2K balance, I would never use 20 micros per trade. I can tell you that now. I would use 2 micros. Okay, so there's the oversizing, Luke. And again, you have that a little bit wrong there. You need to first see how much you're going to risk, and then, like in ticks. So if you're going to risk 40 ticks on a 2K balance, that puts you into single micros, I'm afraid. I don't know what's going on with my computer here. Let me use the calculator here. So I'll tell you in a second. So you have 2K and you want to use 40 ticks. Now 40 ticks on MES is about $50. How much are you risking on 2K? You're risking 2%. And that's like 1 micro, right? I wouldn't go risking more than about 3 or 4% per trade. If you trade more than once or twice a day, you need to bring that down. So I would say 2K balance with 20 micros per trade. That's a ludicrous amount of risk, man. It's like, you say that to a professional trader, you go to a prop firm with like that. Let's say that you're like going for an old style prop firm and you need to give them a track record, and they see you trading 20 micros in a 2K balance. They would just boot you out the door. They wouldn't touch you with a barge pole. Like, this is what people don't understand. Like, what is the thinking there? Like 20 micros per trade, that's 2 minis. 2 minis. So what's that? That's 25 per tick. And if you want to risk 40, you're already down 1K. You've lost 50% of your balance on one trade. So 1 or 2 micros with a 2K balance on a 50K to start with. To start with, it's not forever. Again, I have to keep mentioning this. It is not forever. It is just to start with. You need to build a buffer first, not go head through the wall with 20 micros on a 2K balance. So no wonder you guys lose. Like, I'm really not surprised that a lot of you are not lasting more than 3.5 seconds in exaphase. I mean, yeah, even Bruno is flabbergasted. Yeah, we're all shocked. Like, what are you doing? No, absolutely not. I did have a video on my channel called Value at Risk as a measure for your position size. And the idea there is that you take the biggest losing or winning day, it doesn't matter, for the product that you're trading. And on NQ, there was like 5%. That was like a crazy amount of ticks, right? And then you go, well, what size of the account would I need to have if I were to just kick off one trade without any kind of messing around in optimizations, which is like putting in stops, putting in targets, literally as if you're an investor. You pop in a trade, how much buffer, if it completely goes against you on that day, you happen to be in the worst or best day, and it goes against your position, how much money would you need to have? And I think you're going to come across the fact that on 1 micro on NQ, that number is going to have to be somewhere around, I think it was like 2,800. But if it's 5%, I think that's closer to about 3,000 or 4,000 on 1 micro. So what the hell are you doing trying to trade 20 micros on a 2K balance? That's just like, don't do it. What is a failed auction? Tabitha wants to know. A failed auction is a concept from market profile and the auction theory that we can use to gauge exactly what is going on in the markets. Right now, do we have a failed auction in ES? I mean, it's a quiet period and we have a neutral day. So it's not the best example because that's a different trade. But let me try and find it. Now, I am going to have to use my other platform for this to illustrate. And we had a failed auction yesterday towards the end of the market. So here we go. I'm going back in time. I'm just going to remove this overall volume. The red box represents the first hour of trading, okay? You can see that for most of the day, the market didn't actually break that. It was just sitting in that first hour trading range, doing nothing. Literally just hanging around, not doing anything. And then finally, as we got to post-lunchtime, we managed to get outside of it, but then they quickly pulled it back, reversed, made a bullish engulfing, and that is what constitutes a failed auction. So it's effectively them looking for business below the first hour of trading, failing to find business, and then reversing the price action, then rotating all the way through to the opposite side of the first hour of trading, which is also called the initial balance. So that's a failed auction. It's one of the FAQs that should probably start nearly every single day with the failed auction, initial balance, like glossary. But yeah, that's basically the premise of it. So if you don't have an extension, that's like a very quiet day. If you do have an extension, but then it just keeps going, that's another thing. That is a successful auction, and it's called a sustained auction, right? So that's more conducive to a trending move. There's also neutral day type, so where you have extensions on both sides, and then the expectation is that the market is going to behave as if it has an elastic band on both sides. So, this side tries to pull, this side tries to pull, but nobody is winning. And the expectation is that most of the time when you reach those extremes, you're going to go back to the middle. So if you couple that with something like opening inside balance, so we traded somewhere yesterday, we failed to move outside of that area, and today we're opening in balance. That's what we mean on the main broadcast when you hear Hogue say that. But then throughout the course of the day, we kind of wag around the first hour of trading, not really taking it to any new levels. That is the point where you can say, we have a neutral day type. I can now turn into a range trader, put on my Dolby hat, and go, right, I'm going to ping it. I'm going to be very patient. I'm going to be waiting for the extremes of this range. Whichever one comes first, that is the one that I'm going to take as a neutral day fade to the middle, not the full rotation. There are like nuances to that, so that's just a very quick way of describing what's happening. But hopefully, Tabitha, that makes a bit more sense for you. Do you use ATR to size relative to volatility? I don't really use it. Like I have ATR just in case we have a massive day or something. But my way of sizing for the volatility adjusted stops is a bit different. I have my own system. And because I came up with all of these different ways of doing things, this is why the Marcus Stoker's method exists. Because I didn't see it anywhere else. It's something that I came up with, I found very useful. So the way I do it is I take the previous 10 or 14 days, depends on what we have going on. And then I will divide the average session range. So I take just the regular trading hours and from the previous 10 sessions, and I will divide that by a certain number to get my volatility adjusted stop. So that's my way of doing it. The one problem that I have with people doing just the ATR is that it takes in whatever 14 periods of the current day. Now, that can be a little bit fraught with difficulty because let's say you want to trade the open and you look at the ATR. Now, the last 14 candles on a 5-minute chart, they're going to comprise of London, aren't they? So how does that relate to the New York session that is bonkers? It doesn't, right? It doesn't. It's effectively, I'm going to kill this ES trade and then see if I can find a better location because I don't like it anymore. But yeah, so effectively when you're only taking in the previous 14 candles and you happen to be in that period where the next session is starting, it gives you a skewed idea of what's going on, right? It gives you an idea that, oh, this is the range that we have. And then new players step in, the volatility goes completely insane, but that's not going to be fully reflected until you have the next few candles that will increase the ATR. So for me, unless you're late in the session, the ATR measurement was always a bit flawed because I trade through 2 sessions, right? So I found a different way of doing it. And I use regular trading hours in my own system. But ATR can be a good starting point. You know, anything. What is coals? Coals? I don't know what coals. Calls, you mean? And or let me try and turn myself into an American. Calls? Calls and puts, options, right? So where is the largest interest at certain prices? Calls. That's funny. Yeah, you guys are cracking me up today. I'm going to say that. So yeah, calls, as you can see, C-A-L-L-S. Calls, gamma wall, puts. So those are levels taken from the options chain. And they represent areas with the largest strikes. And around them, market makers have to hedge. Okay, they have to hedge. So they either hedge by going straight through them, but most of the time they will hedge by moving away from it. When you have something as strong as gold, what we've seen happen over and over is they get to the calls area, then there's more call buying, and then they just smash through it. So they almost use it as a springboard for further momentum. That's kind of the idea here. But we'll see. Again, no trade is 100%. In fact, my trades are notoriously 43% accuracy, so don't freak out. But because I go for these big risk rewards, you can see if this one works out, it more than makes up for any other trades that I was still looking for, the big move, but never got it. And as a result, ended up with like 1R. However, if this one gets there, this is 1, 2, 3, 4, 5, like it's about 7R. So, you know, you can, I mean, I could probably even afford to go down to like 30% accuracy and it still wouldn't hurt. But I don't find that comfortable. There's only a certain amount of accuracy that I can handle. And for me, that seems to be about 40%. So 40 to 50% is where I'm comfortable. So I float between about 40% all the way up to 56% on average. I do have certain days where I'm a little bit more scalpy purely because the market is telling me to do that. And then my accuracy can go up to about 75%, but that's an outlier. So, yeah. Nicholas wants to know why I'm in those trades. You might have joined a bit later. So I said on gold, we ignored the supply from previous week, created a new supply, completely ignored it, and now we're smashing towards the all-time highs. I'm looking for the market to use the all-time highs for popping stops for people who are top picking. So they are trying to maybe go, oh yeah, we're going to short here, trying to be cute. But what we've seen happening on gold is that whenever they do that, all of those people who are trying to pick tops get completely run over. And we have a 3K call resistance. So there's obviously a lot of people in the options chain looking at 3K as their strike price. There's one smaller one at 29.65. But if that one goes, then the coast should be pretty clear up to 3K. Is that going to happen today? I don't know. But the way I like to run my sort of swingy type trades is to look at it one day, take a chunk out of it, and then if the setup is still there or similar, the next day I will try to get back in on it. ES I took because of a similar reason. 61.50 yesterday was where the calls were located. Today they have moved up to 61.75. So at some point of the day, like ES can be a little bit temperamental for this time of day, but I still expect to see more buying today and to reach the 61.75 at the very least, maybe even more, but yeah. Okay. Money VD says, thank you so much for the stream. I've learned a lot from you. Most importantly, being patient with my trades and daily life. Excellent. Love seeing that. Love hearing that. Patience is where it's at. Trading doesn't have to be stressful. You know, many people over dramatize it and they go, you know, oh, I made $1,000. Then I lost $1,000. And it's like, why do you do that to yourself? Just, you know, just relax. You know, it's okay. You don't have to do 1 million trades per day. That's not necessary. So good on you. Grant says, does anyone know where the Topstep levels are? I see how to put them on my chart, but what do they represent? Okay, let's show that. Let me just orient myself here. So Topstep daily levels, right? When I put them on the chart, let's go down to a 30-minute chart because otherwise they're all going to be very close together. When I put them on my chart and I go, what the hell are these? Well, you can actually go into settings. Is it in settings? No. So you have to go on the actual price chart, labels, and then one of these will show you what the name is. So let's try this. Here we go. Okay, so that is it. So labels, so right click on the price, not on any kind of symbol. Right click on price, go into labels, and then, what did I say, indicator name labels. Okay, so that removes it. Let's do that again. Indicator name, labels, click, there they are. Okay, and now you have all of that. We'll see whether we get a rejection. I mean, it's a bit early because this is these are the RTH specific levels, so it's not London levels. So this will be relevant for today, but if it opens inside value, that's going to put a bit of a wrench in the works. So settlement is a little bit lower. These are probably going to be updated today when JD wakes up because he does them manually. I don't know whether you guys know that, but these levels are done manually by JD. So, yeah. Failed auction is specific to IB ranges. Well, yeah, how else are you going to know that the auction has failed? You need some sort of a reference point, and the first hour of trading is that reference. What other books for volume profile? I gotta check it out, Dalton. I would suggest market profile, not just I mean, he teaches both, but market profile is more resolution. When we talk about failed auction, when we talk about initial balance, those are specific to the market profile concepts, not volume profile. Volume profile is just low volume nodes, high volume nodes. There's not that much resolution in it, so I almost use it instead of the supply and demand. You can kind of see where those levels are. Just going to remove this because it's a bit messy. Yeah, so Dalton, definitely a good choice, even though it's a little wordy, so probably not the best for the new trader. Like I said, I've got my books. One of them is called Day Trading for Income. That's on Amazon. I basically have 3 books. One of them is Supply and Demand and Q Points, also my concept of Q Points. Sort of like a missing link in supply and demand. Then Market Profile is the second book. Third book is Candlestick Patterns. So just putting it all together. But yeah, Dalton is a great way to start. It's very, very detailed. And very, yeah, very detailed, very wordy. When I first read it, I already had kind of a bit of an idea about what the concepts are, because I heard about it from my colleagues, right? I went into a firm and everybody was talking about it. They were trying to teach us that. So this is why when I read it, I was like, oh, okay, that's what he's talking about. But I still kind of came away from it going, how do I use this? So I can see what's happening. Where do I enter? And that is the critique of market profile, that it gives you a lens into the market, but it doesn't give you actual entries and exits. I went a step further in my methodology to define that, and I do give very clear points of where should you be entering. Because it's not always that you get a trigger signal. It doesn't mean that, like, for example, let's say that you get a sustained auction above the initial balance. Is it a good thing to enter immediately when the 30-minute candle falls a little bit too far down? And then you have a big space up to the initial balance low. So let's say, for graphical representation purposes, that this was the initial balance. And now we smacked back down. Is this a good area to enter? Like, what's your risk there? So you need another thing to give you a structure before you can actually enter such a trade. Now, some people are front running this, so they might go into a trade on the break of it. Of course, the danger there is that you do get that failed auction that I was just talking about, pulls back inside and smacks you in the face. So you have to take in context. You have to take in things like, where are we doing this? You know, are we going back into a mean reversion to value? In which case, longs from value high and an auction fade, which is D concept again, that would be a better choice. And now the auction fade is not a failed auction. The auction was successful. It's just that the auction fade, it looks to go back the other way, either up to the first single print or even up to the initial bounce low. It depends on the context again. But it does give you a very nice lens into not guessing, but just going, oh, okay, this is what they've done with it. So now let's see what they do at the next orientation point. Catherine says, can you please say hi to my husband, Andy? He's a new trader and would lift his spirits hearing a voice of wisdom. Hi, Andy. Hope you're doing very well. So, yeah, just don't rush. Slow down. Size down. And you'll be right. Keep learning. Journal as well. So hopefully that will lift your spirits and get you going on this the right way on this beautiful journey. That can be absolutely terrifying as well. So there you go. Everyone say hi to Andy. Ritman P says, I know you already mentioned this, yet I missed it specifically. I work overnight here in the US, so blessed I can catch the live. What's the strategy that you use to trade? I use my own strategy, which is a blend of things that I've come across over the years that have worked for me. I discarded all of the others, refined the ones that I was using, and packaged it into my way of trading. So I use supply and demand on large time frames. So that's my first point of analysis and diagnosing the chart. Then I go down through several time frames, usually weekly, daily, 4 hour. Then I go down to a 30-minute chart when I switch my attention to the profile, which is nothing more than a study of distribution curves and how strong or weak the moves are. Rather than using terms like auctions and all of that can be a little bit scary, we can just say that if we're far away from a distribution curve, there is a chance of going back to it. That's the value area. I also use time of day as an anchor in what I do. So the time of day has to be right for a particular setup. Without it, we're just looking at a level that has lower probabilities because one of the conditions for the time-based expectation is not there. And I also use average ranges that are algorithmic ranges taken from the previous sort of 10 days, and then you extrapolate how much space you have. So all of that comprises the Market Stalker's method. Over the years, we were on Udemy and on Skillshare, and because of that, we now have over 10,000 students that have joined us for over the last 6-7 years. As a part of that, I have my private coaching as well, but I am now a VIP coach in Topstep as well, where I share some of it. However, over there, it's not so much me changing what you guys are doing already. I'm there to just guide you with your skills, maybe grab a few things that I say, but mainly I'm there to make sure that you're not oversizing, that you keep your accounts, and that you go through a bit of a personal transformation just by making you aware of certain things that can impact your trading a lot. But the strategy that I use is mine. I also make mechanical trading systems based on parts of that strategy. So that's been one side of our business. It's not me just clicking buttons and being the manual trader. It's literally just the algorithm projects levels and then tells us when it's time, and then I make a decision when to take it off, if to take it off, and seeing whether it's within the whole market state environment. So let's say that we have an initial balance break algorithm, which we do have, and it was running great on crude oil for a couple of years, especially in and around COVID. However, as soon as I noticed that the initial balance breaks are all fake outs and usually end up the other way. Oh dear. Pomeranian is barking. All right, that's somebody at the door. So this is what happens when you have a multi-dog household. So I effectively work as more of a quant strategist over there. So I'm not, clicking buttons manually, willy-nilly, making decisions. They have, signals and stuff and all that, and then I have to be the one to figure out whether something like the initial balance break is still valid or not. And when I saw that mainly results in failed auctions in the recent years, we obviously switched it off. So I was like, yeah, this is not conducive to that particular strategy anymore. And that's what people in hedge funds typically do. So you have somebody who's like analyzing the entire market state and deciding which of the algorithms they'll be switching on and off. Yeah, it's not like, I always think it's very interesting that whoever is coding stuff that they think that one single algorithm will be applicable to everything. That's like a very novice way of looking at things. We actually have about 21 different strategies, and it's down to us to decide which of them are appropriate for the current market state. Dee, are you familiar with leptokurtic distribution? I am not. I'm familiar with Gaussian distributions quite intimately. I have not. So I have to say, I'm not a quant. I don't have a PhD or anything like that. I am a strategist because I've come up with strategies that have worked purely because of my I have gone down the rabbit hole of many of the theories, but I'm not somebody who has a PhD in stats or something like that. I'm a cowboy musician. I used to be a session musician before I went into trading, and I am a classically trained musician. As a result of that skill, I seem to have, already know that I have photographic memory, but I also seem to have this pattern matching, which is probably why I was good at music, right? Music is all just one big pattern matching exercise. And for some reason, I see things that are not immediately obvious to other people. But I'm not familiar with that, so I cannot help you. I don't know everything. I would never claim to know everything. In fact, there's a lot of things I don't know. But I know enough to make my trading confidence pretty decent because I've observed thousands of trades, right, in the same framework. So when you're looking through a methodology, through a systematic framework, you can definitely see patterns, that word again. And eventually you start to know yourself. You start to realize what you're good at. You start to realize what you suck at. And then you work on minimizing the things you suck at. And effectively using your strengths to your advantage. Zach T wants to know, your target on gold, isn't it too far? So, Zach, we have 423 ticks of average daily range on gold. My target is 377 ticks away, but I will be happy with it anywhere to within about 20-30% in that. If it gets up there today, wonderful. If it doesn't, I will take it off. Listen, everything's always a zone, right? So for me, when I say my target is 3,000, roughly, yes. But at the point when we go over the statistically probable risk-reward target, right? So your risk is then to the downside. So if we get anywhere up to 29.85, my risk at that point will be all of this. So should I be chasing the final, if it starts to slow down, or if we get to a point where it's the end of the day and, we're running out of time, this is intraday, is it wise for me to then go, well, actually, I got 209.85, but I really want this last. It's negative risk reward, right? So because of that, I have a target zone. So it's not just 3K, it's actually anywhere from about 285 up to 3K. And if gold goes in its mad march higher, like it has been doing for like months, I mean, look at this. Keeps doing that, right? So if it does that again today, 3K is actually within the day's range, okay? It's not outside of the day's range. This is why I said 3K is possible today, because we have 423 ticks to play with today, and that's within the day's range. So no, my target is not too far. I work in probabilities and numbers. That's all I do. I would never put 3K yesterday because we started off down here. We started off at 29.11. Was that within the day's move? No. How much of a move we had? Oh, yeah, over 400 ticks. Okay, great. So today, if we take the projected ranges over the last 10 days or so, look at the size of these candles. So we've expanded the range, yeah? So is it possible that if this goes into another directional move to reach 3K today? Yeah. Is it going to happen? I don't know, mate. I see the same chart as you. I can just tell you that today 3K is within today's range. All right. Pi says, is there an opening range indicator on Topstep? I track many markets on the 5-minute US Open, so can't draw them all manually. There is no opening range indicator as yet. We've been begging for TPOs, which do come with an opening range indicator, for over a year. I unfortunately am not able to help there because I'm just an on-air personality. I'm not IT. I'm not a part of their software development. So yeah, I also draw my levels manually on Topstep too. So if you think that all of my little lines and gamma and London value high and the ASR, ADR, if you think that magically appears for me, you're wrong. So every morning, about 20 minutes before we get on, I sit down and I drag all of my relevant levels from my other main charting platform into Topstep so that I can visualize it very well for you guys. Nick J says, how are you finding the daily range? I take the average of the previous day, 10 days or 14 days, depends on what's been happening. And then I use that as an average range. Very simple. So you use the entire day's average for that purpose. But if I'm trading intraday and I'm not looking for a crazy momentum move, I will actually take the regular trading hours, and that becomes the D concept of average session ranges, ASR. That is what it is when you see my levels that say ASR high, ASR low. I might have it on platinum. Yeah, so if you see this is from yesterday, ASR low, London, that means it's a regular trading hour range. All right, I think that's enough for today. We spent some time together yet again. Beautiful questions, very well thought out. Obviously, some questions about oversizing, so those are also very helpful. But something to think about. How much size you guys are trading with, to rethink that, even food for thought. Yeah, so let me plop some links for you. First and foremost, my Eurex posts, please upvote it. All right, so Tushar says leptocuric distribution are normal Gaussian distributions with strong peaks but wider tails. The bell curve is a bit peakier and thinner. Not sure if yes, it does apply to markets. Absolutely. You can even, so one idea that I have that you can maybe see what volume profile it was doing, because they have bell curves as well. So that could actually apply. That could actually apply really well to maybe look at the smaller distribution curve. So that could be where the POC comes in. So if you maybe have the leptocuric bell curve that is smaller, thinner, then maybe look at the POC as your final stopping point rather than the edge. But I will say that that the 70% distribution curves that we use in profile, they work extremely well. So they are definitely turning points. So again, something to think about. Yeah, so we do need more likes. Click the like, click subscribe, go upvote Eurex. And also, if you're not in Discord, you need to come and join us, because there's a whole bunch of cool people in there. We have VIP groups, yes, but we also have a lot of other lobbies and a whole bunch of cool stuff, cool events. We have Coach Hoop, Coach Paul, Coach Jack. Like, we have a whole bunch of people. Coach Ray. I'm going to see if I can get Ray on here tomorrow. They're all running classes every day, multiple times a day. So a wealth of information. Now, if you want to come and hang with us on air, you can actually fill out this form, which is a casting call. So it doesn't matter if you're just starting out or if you're well on the way, even if you're on the big boards or you're just slogging it away in a combine. fill out that form. You saw the lovely segment, hopefully yesterday, with Jose and Yenny, his beautiful wife. That was an awesome segment. So yeah, they started off like that. Paul H., we've seen Paul here quite a few times. At this point, he's like almost a regular on TopstepTV. That's how he started as well. Filled out the casting call, and then he got a chance to hang with us and develop friendships and ask questions as well, do some trading. It's all pretty cool. All right, thank you so much for being here with me. Hopefully we learned some more stuff. I'm going to let this MGC trade do its thing. If it doesn't work out, again, it's just a probabilities thing, but I will commit to it and let it do whatever it wants to do. If we get anywhere near 3K at any point today, that will be awesome. But if not, we always have tomorrow and the next day and then also next week. So we'll see. That's it for today. Thank you for being with me. This has been the London session on TopstepTV. I'm Deeyana Angelo. I will see you again tomorrow for another episode, another class of the London session. Take care.